Hey, folks. Good morning. Um, Great to be here. Another great summer morning on the show. Yesterday, markets finished in the red, not by a ton. Dow and S&P were off by a half a point. Nasdaq was off by 0.2%. Crude rising. Gold was higher yesterday, 44.72. Um, and um, We've got a sell off that has started this morning because yields around the world are climbing higher. US, UK, Japan, Germany, all around the horn. There is concern regarding debt, sovereign debt, futures, NASDAQ off north of a 1 percentage point, Dow down about a half a percentage point in the futures. Um, sorry, S&P, excuse me, Dow down marginally. Um, we haven't seen the 30-year at five. We're now solidly above 5.3%, and we have not seen that since 2004. Whether that will matter greatly or matter not so greatly, we'll go ahead and monitor as the days go on. Um, We had a number of announcements yesterday morning, I think right as we were getting off. First, I mentioned the Google $5 billion Australian bond raise. I think more consequential was OpenAI's 10 gigawatt data center deal in Ohio with SoftBank, or a subsidiary of SoftBank, SB Energy, that's partially being backed by NVIDIA. And then there is a few articles out about the exodus of talent at OpenAI, which we've been chronicling over the past couple of weeks, and a little bit of a lull in earnings and macro data. By the way, before the market opens this morning, we're supposed to get Home Depot. I don't know if those earnings came out yet. This afternoon, after the market closes, we will get Toll Brothers, the builder, amongst some other technology names, and tomorrow morning before the market opens, Target and Lowe's. But the the release of company specific information is not as fast and furious, and so it allows for the press and the market to consider other things, such as such as um, credit card delinquencies. More Americans are delinquent on their credit cards by 90 days or more uh, than any point since the Great Recession, since the Great Financial Crisis. That's 13%. It's a pretty staggering number. 13% of all credit card balances are currently overdue by 90 days or more. Um, NASDAQ talking about launching overnight stock trading starting in December. So we will get NASDAQ trading 14 hours a day, 5 days a week. We will eventually get to 24/7. And it's not just US markets, Canadian markets, which I'm heavily involved in, are also in discussion. 24/7 is hard because there needs to be a little bit of time to cut the day essentially and do some settlement. So,
I wonder what technology they're going to run that on, David.
Carlo, in the face of the sell off this morning, crypto's holding up quite well. Bitcoin's at 64 plus, Ethereum's at 1900. And yes, sir, the answer to your question, I will take blockchain for $1,000, please. Absolutely, Carlo. I did not mean to set you up with that, but you're more than welcome to take that. Anas, the world is screaming about diesel crack spreads. Do we really care that much? Is that the most important thing on the energy agenda
You
this
know,
morning?
this is again, we are on our own on the show. Therefore, we have to market ourselves, and we have to market the show and brag about what we do here. I think the audience here heard this long ago about the diesel crisis. So everything is happening exactly as expected. If you would like me to explain the situation in 4 or 5 minutes, I will. I would. Otherwise, I will stop here.
No, please go ahead and talk about it.
Also, David,
Yeah.
to add to that conversation, which Anas has been predicting, JP Morgan is predicting catastrophic economic outlook due to fertilizer production shortage in the coming year.
Yes, Eric's not up here also to run that victory lap, but we'll go ahead and give it to him too. In terms of food shortage concerns around the world of emergency level proportions. Anas, you go ahead,
Okay.
please talk.
So I'm going to talk right now only about diesel, and later toward the end of the show, we'll talk about the energy news and everything else. So here is the situation. Before the Hormuz crisis, I'm talking about December. Since then, it was very clear that we were going to have diesel issues in the United States. So, in our reports, basically, we were predicting very low storage levels in the United States, even without the Hormuz crisis. Now, moving forward, we have the Hormuz crisis. So, what happened? In the last few years, we have new refineries being added in the Middle East. One of the largest refineries in the world being added was in Kuwait, called the Zohr refinery. And then the UAE expanded their own refinery, which is called Ruwais refinery. At the same time, we have one of the largest refineries, which is Ras Tanura in Saudi Arabia. And they competed with the Asian refiners, and they were, of course, they have the lowest cost feedstock, and they were able to take market share from Asian refiners, etc. And they started exporting diesel, gasoline, jet fuel to Asia and Europe. And the amount is huge. All of a sudden, we have the shipping issues in the Hormuz Strait, and those refineries couldn't supply the world. So we lost the supply from those three refineries, including diesel. And of course, we ended up with a panic in the market as a result because it's happened all of a sudden. It was unpredicted to happen that way, to lose the production of three refineries, major refineries. So we have a panic in the market. What is that panic? The first panic happened when countries like China, India, South Korea literally banned the exports of their diesel. Of course, they used different policies, but they banned it. So we have the first layer, which was the loss of the diesel from the Gulf. And then the second layer is the loss of diesel from those countries who panicked and they don't want to have a crisis within their own countries. As a result, now we have a panic worldwide. And what happened worldwide is we have traders who looked at this and say, okay, if diesel prices are going up and diesel prices are going to go up by 20% next week, why I have to sell my physical oil today? I just hoard it or slow my ship a little bit at sea and make more money. And as a result, we ended up with hoarding by traders, slowing ships, etc. And that the third layer of the crisis. Then we have the fourth layer. The fourth layer is now buyers are panicking. So they started bidding up prices. And what happened is, and this is a true story, by the way, there was a diesel shipment going from India to, I think, South Africa, and halfway basically it was bought by a trader in Singapore, so it has to make a U-turn, and then on its way to Singapore basically someone in China decided, well, we are running short, so I need it. They bought it, then it shifted from Singapore to China. On the way, the guy in Japan basically panicked, and now he wanted that shipment, so we ended up with more diesel on water than usual, And that was the fourth layer of the crisis. But the most important thing that happened was we cannot make diesel in large amount in economic way from shale. Shale oil is light sweet crude. It is good for gasoline, it's good for naphtha, but not good for diesel. For diesel, you need medium or heavy crude. And what we lost from Hormuz, most of the crude that we lost from Hormuz, aside from the refineries, was the medium sour crude. That's why oil prices increased to above $170 in Asia during that period in March and April, simply because of that. We lost that. And therefore, those refiners who are able to produce the diesel, they don't have the crude for it. What was the reaction of the IEA and the Trump administration? Is to release oil from the strategic petroleum reserves. In Europe, they have reserves for diesel, so they released that diesel, but it's gone. In the United States, we don't have diesel reserves. What we have is we have light crude and we have medium crude. And all the additions since Biden released the 211 million barrels in 2022, when they started building the SPR, all the additions were medium sour because we produce massive amount of light sweet. We export light sweet, so there is no reason to store the light sweet. So they started storing medium sour. Now the government, the Trump administration decided to release 172 million barrels from the SPR. We are already about 100 something right now in terms of releases. I think we still have about 45 million left to be released based on the plan. So what they've done is they started releasing medium sour from the strategic petroleum reserves. The impact of that was US refiners loved it. They know there is a shortage of diesel worldwide. Diesel prices are going up. So the US refiners started taking oil from the strategic petroleum reserve, medium sour, refining it and exporting it. Americans did not benefit from much from it. That's why diesel prices increased to record high, especially in some states. And as a result, the SPR was the main source of the increment or the incremental increase in medium sour that produces diesel. And we ended up with the highest exports of diesel in the history of the United States as a result of this. But that was not enough. So we ended up with another situation because Ukraine kept pounding the Russian refineries and the Russian ports. We lost the Russian diesel from the market, and we also lost the medium sour crude that was coming from Russia and Kazakhstan. In 1 week, we lost 3 million barrels a day as a result, and the Trump administration said nothing. And instead, they wanted to sue the US oil companies as a result, and they ignored what Ukraine is doing. So the issue here is we have all those layers that led to this crisis that we are in right now. Here is the problem. The SPR is going to, or the releases from the SPR are going to stop very soon. So from where we are going to get the medium sour crude? Russia and Kazakhstan cannot increase production substantially to compensate. We still have the issues with Hormuz. And with Bab el Mandeb, there is another issue because the Saudi exports declined. Why it is important? Because, and listen to this, because this is kind of really important piece of information. The Saudis basically export something called Arab Light. But Arab Light is just the name. It is medium sour crude. So Arab Light is a medium sour crude. We lose it from the West, then it is a serious problem. So we have, this is a global problem happening all over the place. And the SPR is going to stop very soon. But here is the problem. Very soon, US refiners are going to go on fall maintenance. And that is a big problem because once they go on maintenance, then they are going to stop producing diesel. And we are already short on diesel. What the situation we are going to end up with is When refiners stop, then they don't need the crude. Then demand for crude will decline and storage inventories of crude will go up while we are short on diesel. Right now, the diesel inventories in the United States are way lower than the bottom of the 5-year average. So we are going to end up with a situation for gasoline and diesel where crude inventories are going to build up while we are going to see a decline in gasoline and diesel prices, and therefore we are going to see divergence in prices where crude prices will stay low and gasoline and diesel prices will go through the roof. And in the United States, they will keep going up until we have no arbitrage between the US and the global market. And therefore, then exports of diesel and gasoline will decline substantially. So we are in for higher prices. And President Trump and his team do not understand this mechanics of the market where you end up with low WTI price and very high gasoline price. And they cannot do anything about it. The only thing they can do, basically, from a policy point of view, is to ban the exports. But if they ban it when the refiners are on maintenance, it does not make any sense. Back to you.
Do the Canadian oil companies and refiners come out with a windfall on us?
In terms of refineries, everyone, basically refiners are going crazy. This was, if you have money in refiners, probably this is the best thing that ever happened this year. So refineries basically have done incredible job, not only here in the United States, worldwide, except those refineries that have been shut down in the Middle East or been hit in Russia. But refiners worldwide, they've done great. In the United States, it's just an amazing story when it comes to refining. The Canadian producers benefited, and everyone knows, especially my Canadian friends, that I've been bullish on Canadian oil for a very long time. And what's good about the Canadian oil here is they benefited from the higher price on one side and the lower Canadian dollar on the other. Why they benefit from the lower Canadian dollar? Because most of their costs is in Canadian dollar, while they sell in US dollar. So they benefit from that. So Canadian LNG is good. Canadian oil is good in terms of investment. It just they benefit from those two. But the problem is they cannot increase production significantly to compensate for any halt in U.S. SPR releases.
Excellent. David Nikoski, your hand.
Yeah, a couple comments as well. It's in somewhat the same area on the energy front, but in 2002, we came out with a very bullish call on the tanker stocks, and during that period from 1998 to 2002, you had about 550 tankers that were sold for scrap as crude oil prices reached $10 a barrel. Right now, the estimates are that 300 to 500 tankers have been scrapped because of the COVID era. So when you're looking at that and seeing that, traffic is shut down in the Middle East, a lot of these ships have to, go over a lot longer routes, going through the Cape of Good Hope, over to the US. And that's stretching that that time on the ocean of delivering supplies, especially when you have that many tankers that have been sold for scrap over the last 5 years. So these guys kind of have a really good lock on the market. Anyone that has looked at the ticker symbol BWET, you will see what I mean. Prices are skyrocketing. So not only do you have a shortage of ships, but the time on the water to deliver, the product is taking that much longer, and in many cases up to 30% longer. So, when you tie that ship up, just transporting, you just end up with major problems. And again, this is a scenario that took place almost verbatim from that 98 to 2002, end of 2002. And we put research out at that time. That's something that I've been watching closely. No one believes the earnings on these tanker stocks. A lot of them are trading at 2, 3, 4 times earnings. But you don't build a ship overnight. So keep that in mind. Back to you, Anas.
Yes, I just want to build on what David has said. Add to that sanctions. We have hundreds of tankers that been sanctioned, so that makes the legal tankers available, or the number of legal tankers basically is very limited, and that's why tanker rates are very high. But because of that long haul that people are talking about, and now with Bab el Mandeb, the Saudis are sending their oil around Africa through the Suez Canal and the Mediterranean. So we have a longer distance than even a month ago. So what happened here is the only way to reduce your cost is to use a VLCC, and therefore the demand for VLCCs basically increased substantially, and their rates basically went up substantially too. But sanctions played a significant role in that. As a result, and I'm saying this, we will go back to this point probably several months, probably a couple of years from now. I don't know, but I have to say it in a sense to mark the point that the moment the Ukraine war stops and sanctions are eased on Russia, that the scrap that David talked about is going to be massive, simply because sanctions give life or extended life to too many tankers that can make money while at the end of their life. And therefore, once everything becomes legal, those tankers cannot operate and they cannot be insured. And therefore, we have to get rid of. And therefore, there is a chance for those who wants to make money in shipping is to watch this development. And if it happens, the moment sanctions or Russia are relaxed, we will get rid of those tankers, and therefore we'll end up with lower number of tankers. Back to you.
Super. Thank you, Anas. We'll bring you back in a little bit. Um, I wanted to go ahead and highlight earnings this morning. We now have the numbers from Home Depot. They beat on earnings, they beat on revenue. Stock is up marginally. The earnings surprise is Klarna this morning. Not that it disappointed in terms of actual second quarter results, but it disappointed a lot in the guidance for 2026. For the rest of the year, the stock is down in the pre-market like 15%. There was a great article out yesterday, I'll try to find it, about how buy now, pay later is now being utilized for things like electric bills and water bills. This is just, it's really great as long as everybody keeps paying. It really sucks when everybody becomes reliant on this and the train stops or begins to stop. I did highlight earlier the 90-day delinquency on credit cards has never been higher than since the financial crisis. So the consumer, at least the lower part of the K, clearly is ailing, and to go ahead and build up, you know, services being offered to people that can't pay for things up front or on time is not necessarily a great business model heading into a more challenging economic environment. In that vein, the consumer Nike stock falling to a 12-year low. That's been regurgitated throughout the financial media. It is down just awfully for a very extended period of time. It's had its own difficulties vis-a-vis its policies that it has had over the past number of years, but then also, being traded so high in terms of valuation and having such a gap with its competitors like Adidas, and that has started to shrink, and its difficulties in China. Also, in respect to Klarna, by the way, they have announced that their CFO and CMO are leaving the company in early 2027. That is not a great thing for a company that is in the financial business. Your CFO is probably more needed than in most other types of companies. Paul, over to your hand, and then I want to go to Brandon on some Anthropic news.
Yeah, I was just posting some info on credit card delinquency as I saw the note that you had there in the title. Yeah, credit card delinquency is almost got to the number of GFC levels. Basically around like 13%. There's a lot of different reasons for this. I mean, one of them is just the number of accounts that have been issued since. You could just kind of go down the post. From 2012, we had about 400 million credit card accounts to about 670 million. So a lot of people were given credit. This is for a lot of different reasons. Like new programs came out, a lot of teaser rates. Also, one of the things that's interesting is the FICO, the quality of the type of FICO. If you talk to some of the credit bureau people privately, they'll say, yeah, a FICO from 700 from 20 years ago is not the same thing as a 700 today, partially because of the CFPB, partially, for people being more aware of their FICO and being, more tools to monitor it. Basically back then, maybe 2006, you had to pay for your credit score typically, or you had to mail it in to get a copy of it. Now it's typically on your you have Credit Karma, and your credit card typically gives it to you directly. So people are definitely more aware of it so they can manage it. And the CFPB has created more tools to dispute charges. And that's been kind of shanghaied a little bit in terms of people using it as a method to get their credit improved for at least 30 days. Basically, if you dispute anything on your credit card or your credit report, it has to come off immediately, at least 30 days. And then people sometimes do that and then actually apply for a card or auto loan or something like that. So it's definitely more, it's not the same tool that we had 20 years ago.
We've had
So you can see
major
that.
grade inflation, right?
You
Yeah.
could say that. That's a good way to say it. Yeah, and I think the credit bureaus. I haven't seen any of their research on them explaining that, but I think privately I've had conversations with guys and then they've said, yeah, it's different now. And then if you look at the last tab on my thread there, it just shows who are the people actually going into serious delinquency. It's the 18 to 29-year-olds. So that's the one. That's the one. They've all gone up from since COVID in terms of the transition into 90 plus delinquency, but the one and they've turned around some of them, including the 18 to 29, but now they have spiked up again. So that's your kind of your second derivative. The second derivative of the rate of change. The rate of change is now increasing for the 18 to 29 and pretty much going down or flattening out for most of the rest of them. It's something that you kind of need to be aware of. That's kind of who is the primary portion of the primary group that's having the issue. When you look at the number of accounts, 400 million to 670 million, that gives you a sense of who's applying for more accounts. Typically, the people getting new accounts are people with new credit, people that have just turned 18 or 21. It's not the 60-year-old is not getting a new account typically. So you can see the growth, and then those are the guys that have gone delinquent. The Klarna and the Affirm, those guys. I'm kind of half of the products that they do are not typically don't show up on your FICO. At least they had in the past because they're not really a officially a loan. They're just like a payment process where you like the pay in four is just for ATM ACH kind of transfers. And then if you go delinquent, then it kind of turns into goes into collections. But the loans that they create that do get reported on your FICO are more the longer term, like the 6-month, 12-month. Those are typically our personal loans that actually they run your FICO. But the others, typically the pay in four, they typically don't run your FICO. They probably do a soft pull, know what your FICO is, but those never really show up on your credit report, or at least they haven't in the past.
Thank you, Paul. Dave, go ahead, jump in.
Yeah, just some comments on Nike. It's currently down 87% versus the S&P since 6/8 of 21. I can't tell you how many DMs I get. What do you think about Nike here for the last 2 years? The answer is the same. I don't like it. Wait for the bottom, wait for the capitulation. I just don't see anything in that chart for a technician to say it's time to buy. I'm happy to miss a 10% move off the bottom to ensure a bottom. So he who picks bottoms gets stinky finger. That's the one thing I'll say. When it comes to, there's a number of BNPL names out there. A lot of, the other ones are getting hit this morning as well. It's an area that I'm not as interested in. But if you look at the other side of the spectrum, and David Towell, you might know ECPG. They buy bad debt, and there's also Jefferson Capital that are have been absolutely tremendous. So these are companies that come in and buy the bad debt and then try to collect on it. So they buy it at a major discount. But that area is just really starting to grind higher. ECPG has done extremely well for the last 2 years, so that's an area of interest from me at least. Back to you.
Yeah, certainly. If the wheels start to fall off on the, let's call it investment grade or high yield consumer side, those folks that are bottom fishing are going to have a lot more to do. Andy Kaufman, over to you. Good morning.
Good morning, everyone. How you guys doing? Just a couple quick notes. Just wanted to opine on the credit card delinquency. We follow this closely at our shop. I think the big thing to always think about here is the data, because you get it from very different sources, and it can be conflicting. So you can see Fed data and numbers that the Fed puts out, and sometimes it can be a little bit alarming. But then you look at some of the BofA or JP Morgan data, and it's definitely conflicting with some of the data. So you got to look at it closely and look at all of how they collected and what they're doing. Is it actual real data? Or are they bootstrapping and doing some sort of adjustment? The other piece, and what you hinted on with the CFPB, is something that we looked at when we were looking at the data, is the balances and the amount of credit given per credit card has gone down significantly. So, 2008, 2009, etc. You could apply for a card, anyone could get a credit card, and you get a massive balance on it. Where now, if you're in that 18 to 29 cohort, or even up to 34, you're not getting that $20,000 on your credit card. You might get 4 to 5,000. So there's a couple of things that are critical in that. One, that hurts consumption, that hurts spending, but also if you are delinquent and are defaulting, the balances aren't as large, right? So it may not be as much of an issue. The problem is the amount of credit cards per person or per family has gone up. So what we haven't been able to triangulate exactly is, what does that mean for total debt and total debt balance, and what does that mean for potential balloon? Now, if you go into the buy now, pay later, as we analyze that data, it becomes even more murky because it's unknown. So how many of these credit cards or credit card families or individuals are utilizing buy now, pay later instead of credit cards? And what does that mean to balances and potential delinquency? It's really hard. A lot of this data is very murky and it's hard to sort. So that's why it's just important to know that there's some issues in terms of what you follow. So if you just take the headline numbers, it doesn't always give you the full story, but it's definitely telling. What we've been saying is that, the delinquency data had come back to 2019 levels and things like that. And we're like, okay, that's a concern, because we thought we were starting to get into critical levels, and it just keeps getting larger, and we haven't seen that pop. We haven't seen that issue in terms of consumption in the consumer. So it's something we need to keep watching closely. I think as long as you're employed, you're able to pay those minimum balances, and you're able to push, kick the can down the road. The question is, how long and how far can you kick it? We're still watching, and we're not sure. So that's just, I wanted to kind of highlight those points. The other piece is, there are some new FICO data that's out there. They're working on new FICO levels. They're starting to incorporate it into mortgage pieces. Some of these FICOs are actually taking rent and utilities into consideration, which can boost those scores, which otherwise wouldn't have been in there. So there's some things changing, and that's all around the CFPB and things that came out post 2008. Back to you, Dave.
That's super, Andy. Thank you very much. I hope folks you listen to Andy's the details on picking apart the data and the trends so that you can translate appropriately. Please keep us posted, Andy, on your triangulation of all of it. Really appreciate the detail. Justin, go ahead.
Just want to take everybody back to some bad decisions Nike made years ago and signs that they were eventually going to tank, which is, of course, they started working with Colin Kaepernick, who had a very polarizing, divisive message. They started supporting protesters and protests in the country. No matter which way you stand on the BLM protests, you thought they were good, you thought they were bad. Nike chose a political side. That can get an initial spike because you get some attention, you get some PR juice, you get some momentum. But the audience that attracts are not long term purchasers and are not long term investors either. So, whenever you get involved in politics, whenever I think of Ben and Jerry's, and there are a lot of, who eventually had to sell the Unilever. I think Unilever aren't they like dumping that to someone else now? I don't remember that one, but anyway, when you see companies start to get politically involved and politically activist, it usually means some fundamentals are wrong, in my opinion. And it usually shows where leadership's at. Like, if they have time to focus on this stuff, and this is the stuff that's most important to them, it means they're desperately looking for a solution elsewhere. So this is one of those things that I wrote about. I think it was like 2019 or something. I don't remember when this was, but I was like, this is not good for the future of this company. So just a reminder for people, when people get activist and they start alienating half their buyer base, that usually spells disaster in the future.
Super. Stay with us, Justin, because I do want to talk a little bit about comms and about PR with Brandon in the terms of Anthropic. Look, we said it yesterday. I'll keep saying it again until until the IPO. This is going to be the largest IPO ever, and it's going to beat SpaceX. And it is certainly a lot less tested of a leadership team and a head of company than Elon was at the time of his SpaceX IPO. In addition, I think it is a much more, at least of the overall company's mission, it's a much more competitive area than space, at least at this point. And so I think we're going to see almost daily Anthropic news, press releases, leaks, whatever, because the bankers, I can assure you that the PR people that have been hired around this IPO are seeing this as their most important and possibly most challenging mandate ever to get this off the ground, to get it to trade well, to get it to, first of all, to price well, and then to trade well, to be oversubscribed by a couple times. And it is definitely a tall task, especially since we're in a pretty, I don't know, I'd say, not this easiest of times, macro wise and, business AI wise. And so there's a lot to manage between here and the finish line for these folks. And the way that and Justin, you could speak to this better than I can, but the way they manage this is by keeping the positive information as much as they can to continue to flow, regardless of what comes, in the overall market, which they can't control on any given day. And so we spoke about yesterday's second quarter revenue. Well, now we have a number for the anticipation of revenue for the totality of 2026. That has now come out, and they are on track to generate more than $65 billion of annualized revenue for this year. And I expect as time goes on, we will get additional pieces of information. Brandon, the 65 billion in revenue, vis-a-vis what you know about OpenAI, is that a surprising number? Is that an achievable number? Your thoughts on that?
Yeah, no, not surprising at all. I mean, it's pretty spot on with what the rumors have been. I actually think it's going to end up a little bit higher than 65. And right now, OpenAI is around 40 or 45. I think the surprising number is it grew from 47 to 65 in a 2 month period. So it was an $18 billion difference there, growth. I mean, yeah, I'd love to hear from the PR expert here how they, excuse me, I'm cooking breakfast, how they do this. Because on one end, they're talking about, we're putting viruses out into the world. We're doing XYZ. But then on the other end, their revenue's going up. Again, like I'm not saying it is hyperbole. It is the fastest growing company in the history of the world. So, how you look at an IPO with this, I'm unsure. I'm sure the bankers that do so, oh, be quiet, bud, will get paid tremendously because how they figure this out is going to be something special there. So I don't know.
Absolutely. Justin, your thoughts professionally on the concept of under promising and over delivering in a situation like this.
Oh yeah. So one of the companies that used to do this really well I mean, you always want to set expectations just a little lower than you can deliver on them. Always, 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 always. One of the companies that used to do this really well was Apple. They were the absolute perfection. They would set your expectation just a little low, then you'd come in there, they deliver high. You get in the Apple store, and that was quite an experience. Your expectations were not super high, but I don't know. I won't go into my whole Apple thing, but the Apple really does a good job at this. But um, at the end of the day, like a great PR person can't change the truth. I always tell clients, like, because people ask me what I do with damage control, and the answer is don't do stupid stuff. And if if you do stupid stuff, um, apologize briefly. Acknowledge the issue. It's the ABCs. Acknowledge the issue, briefly apologize, commit to action. So the important thing is, like, a great PR person for a company like Anthropic is going to be, when we hear about PR people crafting the message or adjusting the message or adjusting optics. That doesn't really work long term. You can fool people in the short term. They're going to figure it out eventually that your leadership's terrible or that people are doing dumb stuff. What a great PR person does is work with leadership on fundamentals, and they also craft the message in a way that you would, Brandon, you probably talk to your kids there a lot differently than you talk to someone in Congress or a tech CEO. That doesn't make you a different person. That doesn't make you like a hypocrite or a flip flopper. It makes you sensitive to your audience. So that's
I will just add that most of the time you have to talk to Congress the same way I talk to my kids.
fair point. And that's like a great PR person understands the audience and helps a founder adjust, and sometimes limits information and is important as well. And so, like, Elon is one of the most brilliant CEOs in the world, but also very guilty of this, where a great PR person, if he had one, would, and that's not a slight. I don't think Tesla has them. I know that X has some comms people, but would say, bro, that's really really cool, that Roadster, because right now they're talking about the Roadster with rockets, right? Like, they're going to do a demo, and that's going to be so cool. Yeah, that's great and all. But a great PR person would say, Elon, awesome. This is awesome. Yes, we should demo it. Yes, that's going to be a cool event. We should build hype around it. And also, here's how we message it. This is a concept car. We have no deadline on which we're going to launch this thing. We're just demoing this because it's cool stuff. So a great PR person helps frame it because they understand the gap between a founder's understanding and the rest of the audience's understanding, or shareholders in this case, or customers. So and this is the expectation thing. This is where you're really really careful to set people's expectations the correct way so that you can constantly deliver on time and over those expectations, because people are pretty darn smart, and if you don't message the correct way, they get frustrated, they don't understand. And I think the biggest barrier to PR comms that all PR comms people run into is the gap between founder understanding and audience understanding. founders, CEOs, usually it's founders, it's founder-led companies, where it's CEOs sometimes, but mostly founder-led companies, always think that the understanding of the audience is way further advanced than it really is. And so they're talking to their audience as if they're inside their brain, and that just frustrates and confuses the audience. So founders that overshare are trying to be authentic, but it really just confuses the heck out of the audience, and that's what causes pain in the market. That's what causes pain and that's what causes disappointment too from customers. Hopefully that's clear, but if there are more specific follow-ups, happy to answer.
Superb. Thank you. Really, really valuable, Justin. And if anybody from X or the larger Tesla world is listening, please, you need Justin's help. Call him. Brandon, go ahead.
Real quick note on that. One founder that I worked with. This is a short addition. One founder I worked with. Um, I just told for him it was focus, and I was on the call with him. It was a New York Times reporter, and I was just like, dude, the objective today is just to focus on this one thing. He was an absolute super genius. Like, I don't use that lightly. And I was like, just focus on this one thing. If you go down these other rabbit holes, because he had these 10, 20, 30-year plans that sound insane if you talk about them out loud. He sounded absolutely nuts. And I said, so this is why it's important to focus, because you're going to freak this person out if you go down these other rabbit holes. And I got to know him enough that I knew when he was starting to go down a rabbit hole. So I would literally text him, um, shut up, focus. Or sometimes I was on the call and I would cut him off and I would redirect him back to the point. And that was how we were able to get some press. But a couple times he would go off the rails and you could hear the journalists say, whoa, that's really cool. And then they would totally shut down. Anyway.
Awesome. Thank you, Justin. Go
Wait,
go ahead, Brandon.
yeah, real quick, just managing Elon and other CEOs is a completely different um, game. Like there is no managing the messaging with Elon, and I think that that's a great thing. Again, I think he's the only CEO that I know of, and maybe history outside of I don't know Steve Jobs that can kind of do some of this. Steve Jobs was a master at crafting a story. Like I think the best comparison, I don't know, for those that are hip hop heads or rap fans, is like the Biggie Smalls. Like Biggie Smalls would tell a story in his music and his songs that just the whole story flowed, and it was a masterpiece, right? Probably the best ever storyteller ever when it came to that. And I think that Steve Jobs was kind of similar. And then when you look at an Elon, it's more similar to a Kanye West. Like it's exciting, it's hype, it gets you going, it gets you, regardless of, you might not even have liked the words of the song, but you just like the song because
Well,
it gets the people going.
it
And I
gets
think
you and I going, but it really scares the crap out of investors though.
but here's the thing.
And customers.
I don't know. Like maybe you can say that with Tesla. I think SpaceX might be a different story because we're starting to see rocket ships. Like his whole thing, if you think about it, it's the exciting future. It's self-driving cars. No, nobody else was doing that. It's the future. It's launching rockets. It's going to Mars. That's that exciting piece of it. Whereas Steve Jobs, again, to go back to the Biggie Smalls analogy, was I'm going to put this phone in your pocket. I'm going to put this iPod in your pocket. You're going to listen to music anywhere that you go. Any songs that you want to listen to, it's there in your pocket at any time. So it was different missions, visions, values, and goals. And I think that how they executed on their different styles was really a mastercraft to both of them. But here's where this comes to the discussion today. Dario Amodi does not have that. Like when you talk about Claude or you talk about Anthropic or whatever, like Dario, and this isn't a knock on him. Again, I've said this before. He's the nerdy type. He's the guy that you picture sitting behind a computer, you know, coding all day and eating peanut butter and jelly sandwiches or something. Like that's the vision that you see of Dario. Whether that's true or not, I'm not saying that, but that's how people perceive him, as the nerd. And then the messaging that's coming out of his from him. I mean, like, I just read a story this morning. It was like, oh well, yeah, our agents are sabotaging other agents with viruses, mind viruses, and this, that, and the other thing. Like, who's getting confident from that this is the future we want? Like, that's not saying, oh yeah, we're cool, we're getting rockets that are going out into space. No, we're actually going to sabotage the entire economy and the entire world, steal your bank account to make you unemployed, and the world's going to fail. But hey, please give us all of your money because we're at, you know we're actually making $65 billion a year here.
Right.
So yeah,
Somebody
that's
either told him or he believes that authenticity is a big. I believe he's being very authentic, by the way. I believe he believes the things he's saying, but authenticity must be balanced with respect for others, right? So, I don't, I actually, most of us, at least hopefully most of us, aren't truly authentic all the time, right? If you're authentic all the time, you're, complaining to others about things you're mad at, you're lashing out, you're saying like things in your head constant. I mean, that does not build relationships. The authenticity is important, but there's also a filter that you apply, that you're respecting others, you're respecting their understanding, and you're respecting their position, or like in their position, their understanding, where they're at. And so those things always need to be in balance. And so whenever you hear branding people say authenticity is important, it's like, okay, yeah, to a point. Authenticity is important to a point, but I'm not going to go dump on people or just have zero filter at all. I'm going to be respectful for the audience that I'm addressing. And this is one of the things that he definitely struggles with. He just thinks 100% honesty and authenticity all the time is important. And no, you have to be careful how you deliver information, because right now he's painting a picture of the AI future that is extremely dark and scary. And I think it's a future that's, by the way, completely 100% unfounded and wrong. So, like, what kind of damage has been done at this point from all these AI CEOs that really is going to take decades to undo? And we're going to see unnecessary regulations put on things that didn't need. I mean, this is going to be decades of damage,
yeah. So my
all
last
for
point,
crappy messaging.
my last point I'll say on that is, I agree, but then they're still at $65 billion annual run rate. So, like, I don't know how to put those two things together into a coherent story for how they're going to IPO and perform at that.
Justin, any response to that?
Crap, I couldn't unmute. I would imagine they're appealing to like-minded individuals who understand the tech. And once they get outside of that small circle, they're going to have to adjust strategies. That would be my assumption, but I don't know.
Okay. We'll go ahead and leave it there on this discussion. Anas, are you back with us now?
I am.
Okay. Over to you for the
Okay.
energy report.
All right. Hello again. Oil prices increased slightly. Brent is above 91. And one of the reasons why, because the number of passages in the Hormuz Strait and the Bab el Mandeb is low, and that's probably caused the problem. This is a really problem for the Trump administration, because we heard Secretary Wright, who is the Secretary of Energy, talking about this massive amount of oil passing the Hormuz Strait, 9 million, which caused an uproar, especially on social media. That is not correct. And my issue with the statements of Secretary Wright, because after he made that statement, there was an outrage, especially on social media. They've been showing all the data from various tracking companies that his numbers are way, way off. And he came back at night to challenge everyone. Basically, he doubled down on what he said, saying that the government knows better and they know better, which was kind of a complete nonsense. And then second day he appeared on CNBC and he tripled down on that, saying no, our numbers are better, and he attacked the tracking companies. This is really a serious PR mistake. This is a serious issue when you have a government official basically coming to the private sector that's been there for decades. They have the experience and they have the technology, and tell them, yeah, I came in yesterday and I know better than you. Who is going to accept that? And he should have said, we are going to cooperate with the tracking companies, use their experience, use their technology to get better data. That's common sense. But to go and attack them, here's the problem. He himself, his department, the EIA, has some of the worst data being produced in recent years. Data being deteriorating. And the problem we have is, since he came to office, he's been cutting budgets and several reports being delayed, some of them being canceled, and some of the data series that been published on weekly and monthly basis being halted. So the data deteriorated substantially, and all of a sudden he's telling us his data is the best. So we have a serious problem here. So if the EIA data basically being cut, the IEA data is questionable, OPEC data is questionable, all the data in the world is questionable. The only thing left for us are the tracking companies, which is the private sector, and you have to pay to subscribe to get the data. And all of a sudden they are telling us, oh, even those are not credible. And the only credible source is the one you pay $100,000 for a month. That's what the bottom line is. So his statements basically are questionable and he should be called for. This is just complete nonsense to go and question the private sector data that's been there for a long time. And he is coming yesterday just to tell us that all their data is wrong. And now he got to explain why oil prices are at 91. So that's one issue. The Bloomberg published a report and then a story. The title of it is Data Center Gas Plans to Boost U.S. Power Emissions by 20%. This is what Bloomberg basically does best, is to come in and throw a wrench in the middle of something. What they are telling you basically is, okay, all these issues, data centers, AI, etc. Look, this is bad for climate change and emissions are going up, and they are using natural gas. Well, here's the problem. The people who wrote that report do not understand the problem. Data centers have no choice but to build power plants using natural gas because of technical issues. Otherwise, if you don't want natural gas, they are going to go for coal. There is no other alternatives. And the reason why, because renewables do not work and nuclear does not work. Because the demand for those data centers, for those chips, etc., is so demand for energy is so volatile that managing it requires something you can manage. So it's a technical issue. It's not only a source of power. A technical issue. That's why you see Elon Musk basically going for natural gas. He could have gone for something else, but he knows because the experts told him, and everyone knows now that you have no choice but to go for natural gas. And Bloomberg right now is going after natural gas. So it's a technical issue, and we should settle this once for all. With the I'm going to make the statement that natural gas is the conservatives' fuel of choice. For liberals, it is the default fuel. So any way you look at it, we are bullish on LNG. We are bullish on gas simply because of this fact. It is the fuel of the future. And I can go through a long list to support this view and show why natural gas is the fuel of the future. And I seriously think that there will be a day when LNG trade, global LNG trade, is going to be larger than the oil trade, which is the largest in the world today. In the news, a Greek-owned bulk carrier was on fire after being struck by 5 drones off the Russian port Novorossiysk in the Black Sea on Monday. And notice the following, that Bloomberg and others are focusing on oil spills and pollution in the Gulf and Iran and the war, and they are forgetting what's happening in the Black Sea and what Ukraine is doing. Now, I know some people might think, well, I am pro-Russia against Ukraine. This is a complete nonsense. I'm completely apolitical when I speak about these issues here, but it does not make sense when you talk about oil spills in the Gulf and you ignore what's happening in the Black Sea. The while there are many questions, and we get those questions almost every day from clients and new clients and others about China's oil demand and what is going on. This is kind of one of the I don't know how you want to call it, whether you are religious or not, whether you want to use religious terms for it or not. But the issue here is kind of, you see the contrast. A lot of rain in China, and because of the rain, they ended up with a large increase in power generation from hydropower, and therefore they were able to reduce the consumption of coal, oil, gas, everything else. The opposite is exactly in Europe. Exactly the opposite. We have a major drought that is wreaking havoc on the economies of Europe. So you want to know what the impact of drought? We are going to have a space on this very soon, just on the relationship between drought and energy markets. And this is just a perfect example where you can see both sides at once. What's happening in China and what the impact of the additional rain versus the drought in Europe. There is a guy I don't know, but I want to mention his name. His name is Charlie Bililo. He posted a chart. I think that is a very important chart about price increases since the start of Iran war. I'm going to run through the list quickly because I want to make a conclusion out of it. Wheat. These are the price increases since the start of the Hormuz crisis. Wheat, 14%. Palm oil, 17%. Brent crude, 25%. Phosphate, 27%. WTI, 27%. Cotton, 31%. Gasoline, 36%. Rice, 36%. Diesel, 45%. Jet fuel, 56%. Heating oil, 71%. European natural gas, 95%. And now listen to the last one, sulfur, 145%. And when you talk about sulfur, there is a Canadian company called Cavi Energy. Basically, their focus is on energy issues, and all of a sudden, the sulfur thing, because they in the beginning they did not know what to do with it, and all of a sudden it became the most valuable thing they have. So it's called Cavi Energy. The ticker for it is PTOAF. PTOAF. Their stock since the beginning of the crisis, so that goes with those prices, doubled, literally doubled. And this sulfur issue cannot be solved even if we have an agreement with Iran tomorrow. Even when the energy crisis is over, the sulfur crisis will take longer time to solve. And sulfur basically is used in so many ways, so the demand for it is very strong. President Lula of Brazil basically celebrated a new discovery in Brazil. So he called the new discovery in the Amazon River, or near the Amazon River, a passport to Brazil's future. This is Lula. Those who do not know Lula, Lula is on the extreme left when it comes to climate change, environment, anti-oil, anti-coal, anti-everything else. And now he is saying, and this is in the Amazon River, for those who are familiar with the Amazon River or near it, basically, this is one of the most sensitive areas in the world, yet he is celebrating that. And there are implications for that. Let me read his statement and then I will comment on it. He said, when I say passport, I am not denying my commitment to fight for a day when we no longer need fossil fuels. Of course, if you look at his statement, it does not make sense, but he needs to say it. And what is important about this is you look at what Lula said, and what's happening in Norway and what's happening in Canada today. In Norway, they have a leftist government. In Canada, they have a leftist government. But leftists want money. They want to subsidize the social programs and all their programs, etc. And when because they need the money, they are literally trying to step on whatever they said about fossil fuel as long as the money comes from oil. And that's the lesson from Lula's statement. Or you look at Canada, or you look at Norway. Tomorrow we are going to see what the EIA is going to release in terms of data on US storage. Tomorrow is important in a sense because if we end up with another build in inventories, this confirms the idea that I started with earlier when I talked about diesel, that the issue is about crude quality, it is about diesel, etc. And the reason why, because most of the releases now from the strategic petroleum reserves are light crude, not sour crude. And that could be a major issue, but we will know tomorrow and we will discuss it on Thursday. Back to you.
Superb, Anas. Thank you very much. I wanted to highlight a couple of other stories this morning before we close it out. Ravi, I'll get to your hand, and Carlo, if you have anything else to add, just because I didn't let you speak on crypto this morning. But July housing starts came out. Huge miss, down 12%. Housing starts at 1.2 million. Run rate, the consensus was 1.3, and June was 1.4. So housing doing awfully in terms of starts, although permits for next month are higher. Reddit, I think unsurprisingly, but a great move. They are testing audio and video experiences similar to the TikTok, excuse me, type video. Certainly, with the following that it has, it shouldn't be limited to text. Audio and video makes a lot of sense. Let's see what that rollout looks like. Taiwan has taken a step towards universal basic income, I guess, in a sense. The president of Taiwan proposed a universal cash handout to every citizen as part of the country's 2027 budget. It amounts to about 300 or so dollars, $325. And it is being couched as an AI dividend. Since Taiwan has done so well from its semiconductor production and everything related thereto, the government it feels that it should go ahead and share the windfall with its citizens directly, and so there are this cash payout coming. We'll see if that gains any traction in any other countries. We haven't spoken, or I haven't spoken at all, other than mentioning the sale of the Lakers, about everything going on with Mark Walter, who's the seller. The sale of the Lakers for 12.5 billion, shortly about a year after Mark Walter bought the Lakers for 10 billion, is an incredible fix and flip. And Mark Walter is a forced seller right now of the Lakers. Mark Walter, for those of you that there have been some great reports out about everything relating to Mark Walter and Guggenheim and the pressure that he has because of the loads of business lines that he's gotten into, particularly insurance. But we'll do the post mortem on this when the dust settles, because I think it'll be more holistic and more interesting after it's all over. Right now, Jeannie Buss, who is a part owner of the Lakers as a legacy position, is fighting the sale, even though her brothers are interested in selling. But at the same time, Mark Walter is not done selling assets, and the assets that he is selling are additional sports related properties that he owns, sports teams, Guggenheim became one of the greatest buyers of sports teams. They own the LA Dodgers as well, and then football clubs over in Europe. But we'll do that when there's more to talk about, and reflecting back on where the missteps were in terms of Walter and what it says about Guggenheim, which is a pretty large asset manager and market maker. Brandon, go ahead.
Yeah, you know what? One important aspect of this that I think is maybe good to cover is that, and I'd love to hear from the attorneys on this, is that the reason, well, one of the reasons I'm sure Kushner, Thrive Capital, et cetera, are getting into this and why we're actually seeing more VCs. We just saw, Vinod Khosla got the Seahawks in the NFL, and now this with that. The reason we're seeing it is when they get these, outsized returns, which is what we're starting to see happen more and more often because of AI, is they can offset their gains with, I guess, these player contracts, or there's something more to it, but it's a huge way. It's a tax benefit essentially for them to offset their taxes and everything that they have to pay off because of the player contracts and all these different things. So I don't know if anybody is. I was just reading about it. I tried to do a deep dive. I'm not a tax person at all, so I don't fully understand it. But I was wondering if anybody had more information on that, because that's a really interesting workaround if what I'm reading is correct.
Yeah, Ram Aluwalia. If you don't follow him, by the way, you should. On X, Lumida Research is the name of his firm. Ram Ram Aluwalia, AH, on and on. He has done an incredibly deep dive into that issue, Brandon, about the tax strategy relating to owning sports teams. He's been great about chronicling it, especially in the wake of Mark Walters' sale. And he could give you get the deep dive on it and in pretty digestible form. If you take a look at his posts, and we'll come back, we'll review that part of it too. When we do the full review of Guggenheim, Walter, Lakers, and everything else that may collapse in all this. It's a slow and painful unwinding from a firm and a guy who became incredibly prominent and incredibly wealthy over a short period of time, quite late in his career. Ravi, I wanted to go to your hand. Please go ahead.
Yeah, thanks, David. I just had a quick question for Anas. Anas, I think great points on the gas, but just a question about green hydrogen. What is your take on the evolution of green hydrogen, and how do you see that, energizing the data centers? Just your take on green hydrogen, and where is green hydrogen sunrise in Europe, North America? I definitely see it happening in India. So your take on green hydrogen?
Generally speaking, it will be a side fuel, very limited in every sense. And if you look around the world, we've seen major failures and some successes. So we've seen some successes in some countries and failures in the others. The bottom line on green hydrogen is until today, it will not work without subsidies, period. So to think about it as a source of energy, a major source of energy that can compete with natural gas or coal or nuclear, etc., it's not going to be, probably not in our lifetime. Back to you.
Superb. Thank you, Anas. Carlo, good morning. Just wanted to see if you have any updates on any fronts, my friend.
Good morning, David. Great show today. Crypto continues to truck along, as you noted at the beginning of the show. Scott Bessent came out yesterday and announced that the Treasury is opening up a 60-day window for comment on final Genius Act regulations, wherein he stressed that this is the opening for continued dollar dominance. Pretty consistent with what I've been saying about what his strategy is, which for those of you who want to learn more, check out my newsletter on Substack. But it's the Bessent doctrine, which is essentially that very doctrine that in order to sustain dollar dominance and make up for faltering treasury demand around the world. The Genius Act and stablecoins is Bessent's gamble on that.
Can I
We
pause you
have
there?
the SEC.
Can I pause you there?
Yes,
You know, it's
absolutely.
incredible to me that Jamie Dimon continues to sing the fact that in 25 years, the U.S. is going to potentially lose its dollar dominance in the face of the fact that our Treasury Secretary is saying, I have the path forward for which to retain U.S. dollar dominance. It's so frustrating. I'm sure it's frustrating for you too, Carlo.
Well, it really is a very, very calculated gamble, and there's no guarantee that it's going to work. But I think Besson realized that the current system as it exists, especially with China running in the opposite direction of U.S. treasuries and the continued increase in deficit that the United States is carrying, Besson understands the dollar is under extreme pressure. And this, I've said, I think I've been saying this for a year. This is essentially, in my opinion, the last stand for the dollar. If this works, then he's going to probably be one of the smartest and most savvy Treasury secretaries we've ever had. If this fails, then I guess we have Bitcoin as the alternative, which then triggers other people in the space. But the dollar's definitely has facing challenges, and stablecoins is one of those options. And Bessent has made it incredibly clear, both in his written and public comments, about how he feels on this subject. So, will it work? I don't know. And then, of course, tomorrow we have the CFTC, SEC heads, and several crypto centric industry heads meeting at the White House with Trump. And I suspect that that meeting is going to be fruitful in the sense that it's going to put the onus on the regulators to continue to mount pressure on Congress and the Senate specifically to get the Genius Act done after the recess. So we'll continue to monitor that as well, David. Back to you.
Outstanding. Thanks for the update, Carlo, and we'll look forward to the notes on tomorrow's meeting. Folks, I'm going to go ahead and hold it there for today. I wish you all an excellent day in the markets. Go for
Quick
it.
last note. Also, emphasis on what we were talking about earlier. Tesla has announced if you take a cyber cab or a robo taxi, robo taxi ride by I think 8/23, August 23rd, you can go to their cyber cab launch event. And of course, Tesla is down in the pre-market on this news, and that kind of emphasizes our earlier point, which is announcements like this. Normally, you'd see, the cyber cab is going to be a huge thing. It's going to revolutionize transportation. But we've seen so many big announcements come out about Tesla, and they do happen eventually, but we don't know when. And so this is kind of proof of that earlier PR comms issue. Is huge announcement, and the market's just kind of like, whatever. So this is a really good example of what uncontrolled comms kind of does. Does it stop innovation? No, but it absolutely flattens expectations, and people are just like, yeah, whatever. That could happen imminent, or it could happen in 10 years. We have no idea. So that kind of gives you a really good picture.
And you love him anyway. You'll overlook it, Justin. And if any, no one can ever accuse Justin of not talking his book, folks. You know where he stands every single day. Um, the futures have gone a little bit lower since we started. Nasdaq down 1 1/3 point. S&P down 0.5 point. Dow down 0.10%, or 0.10. Excuse me, 0.10% in the pre-market. We'll go ahead and catch up again tomorrow. As I said, we'll see you at 8 a.m. bright and early. Thank you for an excellent show. As always, everybody up on stage and in the audience, thank you for your participation. We'll see you tomorrow.